So today we are starting a topic called standard costing. So before standard costing, let us understand what do you mean by standard cost. So which is standard cost is nothing but it is the cost which is decided in advance before you start a production, before you buy the actual product. There is certain cost which you have decided in advance. That cost is called as standard cost. So what is standard cost? So standard cost is nothing but it is a predetermined cost which is compared in advance of production on the basis of specification of all the factors affecting the cost and is used in standard costing. Okay, in simple words, standard costing is nothing but it is predetermined, pre-decided, you can say, cost that should be attained under a given set of operating condition. That means if I want to make 100 unit of production, 100 unit of goods, then for making 100 units, whatever cost is required by me, in advance I will have some idea that this product would be made in this much cost. So that cost is called as standard cost. Okay, so now the question comes, what is standard costing? So we can say it is a technique which is used in many industries where production is of repetitive nature, similar production. Okay, so if I am having a production unit where I'm making every unit as a different unit, then in that case standard costing will not be applicable. So the standard costing we can apply for those material or those product which are in repetitive in nature, which where we make production in quantities. Okay, so standard costing is basically it is developed because of shortcoming of historical costing. So if you don't, the idea is that if you don't have any predetermined cost, this cost decided earlier, so you may end up with the chaos that you may not be able to arrange that much material, you may not be having that much money to complete your production. So to avoid this shortcomings, standard costing is developed. Okay, so this SEMA London also have defined standard costing as a predetermined cost based on technical estimates, okay, of the material, labor and overhead for the selected period of time for the prescribed set of working conditions. So this was a definition given by SEMA London. So standard costing, we can say, is that technique in which standard cost is determined before you start production, and once the production is done, you compare the standard cost with the actual one. Okay, beta. So let us understand in the system what is done. So in standard costing system, management evaluate, as I said, management evaluate the performance of the company by comparing it with the some predetermined cost, and after comparing they take decision whether the differences, whatever differences are coming, or what are the reason for that, and accordingly they take corrective action. Okay, then what are the objective of this standard costing? So number one, to establish control. But if you don't have standard cost, or if you don't have the cost which is decided in advance, then you may not have to may not be able to control the system. You're not able to control, you're not able to have the control on the workers, on the material. So you're not able to end up on a completion of the product, your product remain incomplete, or you may end up the situation where you're not able to deliver goods to the customers also. Okay, so to establish control system, to establish a good control, you should have standard costing. You have to use standard costing. Then to set standard for various element of cost, that suppose if I'm making a product, so how much material will be required, how much labor will be required, what will be the different types of overhead I'm going to incur. So this idea you should have in advance, otherwise it may create problem. At the same time, bacha, to fix responsibility, okay, to fix responsibility on your storekeeper, on the production manager, on the purchase department, you have to have standard costing. You should use standard costing. Okay, at the same time, to make budgets also, bacha, you need standard costing. So these are the basic objective of standard costing. So this we are discussing the procedure in standard costing, and remember in this particular topic in our syllabus we will not go to the last level, but we'll stop somewhere in analysis part. So how it starts? So in standard costing, how the procedure starts, the very first thing, you set a predetermined standard for sale of margin or for the production cost. Then you collect information about the actual performance. So first you'll do what you will do, beta. First you will set the standard, like I want to make 1,000 units. So what will be the required cost for that? Okay. Then you will check that you get the detail of actual cost incurred. Then now after that you will compare the actual performance with the standard one, and you will see that there are certain differences are coming. Then next step is the analysis. Okay, you will do the analysis of differences, the differences which comes at the time of comparison of actual and standard. We call it as variances. Okay, some people call it variances, some call it as variances. It's one and the same. So the analysis part you will do. In this you will find out the reasons why this differences are coming, and after that you will take corrective action to avoid the adverse, that is the negative variances. And accordingly, if there is a possibility that if you have not made the provisions of that, or your standard is whatever you have set is not proper, you will make the provision in the budget, and accordingly you will make the standard more realistic. So bacha, last two step is not in our this particular topic for you people. Okay, so we'll end up till the analysis part. We'll just complete our problem solving till the analysis part, and the corrective action that we don't have to take, that is taken by the management. You have to report them simply. So for practical problem point of view, we have to reach till, we'll have to go till analysis part only. Okay, so there are certain advantages of standard costing. Number one, for formulation of prices and production policies. To decide about the production policies and the prices, you need standard costing. But it's simple. It's as simple as that. If you don't know the cost, how will you able to fix the prices? Is it possible to fix prices without knowing the cost or any estimated cost? Anyone? Is it possible for us to fix the prices without knowing the cost? Yes, Rishi, Nitesh, what do you feel? Can we fix the prices before or without knowing the cost? Yes. Yes, exactly. So for fixing prices and to make the production policies, you need standard costing. So this will 100% going to benefit in fixing the prices and policies. Then comparison and analysis of data. To compare and do the analysis also, we need standard costing. For delegation of authority and fixing the responsibility, to giving the authority, that's this particular employee will perform this task. At the same time, you will fix the responsibility on him also, that if this doesn't happen, then you will be facing the action. Okay. And cost consciousness, but unless and until you don't know cost in advance, okay, you're not able to allocate the cost. And if you don't allocate the cost, ultimately what it will happen, you will pay more for the expenses, or you may pay more for the material, for the labor, those expenses. Okay, so for better capacity, to understand how much we can produce and whether in a given set of condition I am able to achieve the target or not, for that understanding also this standard costing is really helpful. For efficiency and to increase efficiency and productivity also, standard costing is helpful. For preparation of periodical financial statement also. And the last, facilitates in budgeting, making budgeting decision. Standard costing is really very helpful. Okay, so then we have certain limitations of standard costing. So the limitation is that, first of all, to fix any standard, bacha, you should be having detailed knowledge of that particular production process for that particular product. What are the requirements for that, for making that product? How much labor is required? How much material is required? What type of different overheads will be there? So you should have the technical skills. If you lack in this, you'll not able to fix the standard. And if you're not be able to fix the standard, then it is possibly your whatever standard you are setting with your set of knowledge, then it may end up with the wrong assumptions or wrong setting of standard. So it will be really creating problem for even employees and for the management also. Okay, then see various segregation. When we say I want to fix the standard, so in this bacha, segregation of variances into controllable and non-controllable factors really difficult, we can say. As you know, we discussed in SEM3 also that different types of costs are there. Some costs are controllable and some costs are non-controllable. So how to identify which variance is controllable and which is non-controllable? It is really a tough task. Then duplication, yes, in standard costing for setting standard, you need to duplicate the record. You have to write it 2 times. First, you have to set for the standard, then you have to write it for the actual one, then you have to make a comparison. So it takes time. It is time consuming also, you can say. Then sometime, if you don't have proper knowledge, then bacha, you may end up with the setting of standard, which will be very strict, or sometime it may be very liberal. That is like the standard which you have set, let's say to 1200, you feel that the total cost I'm going to incur for making 10 units will be 1200, but actually it happened that your product is ready in only let's say 400 rupees, 500 rupees also. So sometime when you set even the knowledgeable person also, while setting the standard, he will not allow the variation. Little variation is also not allowed. So sometime we can say the standard costing setting is sometime it is very strict, and sometime it is possible that sometime it may be very liberal. So that is also a problem. Okay, then just understand. Now we'll moving to the actual topic which we have to cover. First, let us understand what do you mean by variance analysis. I earlier also told you the difference when you compare bacha actual performance with the standard one, you 100% you'll get some difference. It is very difficult that whatever you have predicted, the level of achievement will be the same. It is very rare possibility. So 100% you are going to get some differences. Okay. If suppose if I've set standard of let's say cost will be of 100 rupees. If I've getting my work done in let's say 90 rupees. Okay, so this shows me positive trend. Yeah, this is favorable for me. Yes, this I have thought that my product will be ready in 100 rupees, but I am end up my actual expenses incurred was only 90 rupees. So this shows that your differences which are coming is favorable. It's a positive one. Okay, so you denote it by F letter. Suppose your whatever prediction you have made, suppose you have made a prediction that your cost will be total of let's say 120 rupees, and you have ready that product, you have made that ready product in 130 rupees. Okay, production cost you have thought standard was 120 and you made it in 130 rupees. It is favorable for you or it is going negative? Yes, you thought of 120 and you spend 130 rupees. Is it coming showing positive sign or negative sign? Tell me.
Negative.
Exactly. So in that case, negative signs or negative variance is called as adverse variance. Okay, and we denote it by letter A there. Okay, so then
Sir.
Yes, beta.
Sir, लेटर F का एक बार फिर से समझाना.
Yes, why not? See what I'm saying. Suppose bacha, I have thought of that my product will be ready in 100 rupees. Okay, and my workers, whatever they did, they made the same product in 90 rupees. This is good for me or it is bad for me? I have thought of making it in 100 rupees. मैंने पहले से सोच के रखा था it will be ready in 100 rupees. But when we see actual expenses, it went to only 90 rupees. And in 90 rupees, my product is ready. That's good for me or it's bad for me?
Good for.
It is good for me. This is called favorable variance. Differences are still coming. If you see, differences are still coming. But this difference is positive one. This is called favorable variances. Clear, beta?
Yes, sir.
And when you say that you have thought the product will be ready in 100, but you spend more than 100 rupees, 110 you spend, suppose. So this is a negative sign. Okay, this is showing that whatever cost you have decided, it is in negative, or actual, it is differences are coming in negative. So in that case, we say it is adverse. The variance is still, the difference is still coming, but this one is a adverse or negative variance. Clear, beta? Everyone?
Yes, sir.
Okay, fine. Now the next one is cost variance. So cost variance, basically here we are want to find out what is the differences are coming due to total cost. Okay, so very simple. Cost variance formula is total standard cost less total actual cost. The difference will give you cost variance. Then we have price variance. So what price variance will tell you? The price variance will show you that the variances or the differences coming due to change in price. See, whatever price you have predicted, is it necessary that it will remain same for the product? Whatever raw material we have decided, let's say we assume that my raw material will be available at the rate ₹5. Is it necessary that it will always remain 5? It will fluctuate, na?
Yes.
So if the rates or if the variances are coming due to change in price, that variance is called as price variance. And the third one is quantity. Here we are talking about material. Okay. So suppose we have thought of making my 1 unit in, let's say, 2 kgs. So in 2 kg of raw material, I'll be able to make 1 unit. Okay. That is my standard assumption. That is my standard cost. I have assumed that for making 1 unit, I need 2 kg of raw material. But actually, my workers work so efficiently that in 1.5 kg also, my product is ready. Possible or not? Everyone? Come on. Yes, Lakshmi? So I thought that my product will be ready in 2 kg, but actually I use only 1.5 kg of material and my product is ready. This variance is coming due to change, or that due to usage. Okay, you have used less material and you made your product ready. Sometimes it may go reverse also, that instead of 2 kg, you use 2.5 kg. That is also possible. But these differences are coming due to price or what? This difference is coming due to usage, na? You have used more quantity of the raw material. Correct, beta? Yes or no?
Yes, sir.
Such variance is called as usage variance or quantity variance. Okay. So now see here, the variances, the cost variance we can have of 3 types: material cost variance, labor cost variance, and variable overhead. But we don't have variable overhead in our syllabus. We have only these two: material cost variance and labor cost variance. So today we'll discuss about material cost variance in detail. Okay. So material cost variance, in broader sense, if you see, the material cost variance is what? The difference is coming due to change in total cost, due to variation in total cost. Okay. So how to find out total cost? First of all, try to understand that. Suppose I bought 5 pencil. Bacha, I bought 5 pencil and cost of 1 pencil was, let's say, ₹6. So can you tell me the total cost? Yes. 5 rupees, 1 pencil. I bought 5 pencil at the rate 6 rupees. Sorry. Yeah. I got 5 pencil and the cost of 1 pencil was 6 rupees. So what will be total cost?
30.
First 30. So this is that simple. Okay. Material cost variance. And if you see here, we have two parts in this. Material cost. See, cost variance can be result of these two. My cost may vary due to change in price as well as due to change in usage of material also. All of you agree with me? This cost may vary, total cost may vary due to only two factors. If the price is high or low, at the same time, it may differ due to change in quantity used also. Correct? These are the two reasons or the two factors responsible for change in material cost variance. So let us understand this in detail. So what is material cost variance, bacha? Material cost variance is nothing but it's a difference between standard cost minus actual cost. And the formula for this is this one: standard quantity into standard price minus actual quantity into actual price. Clear, everyone? Yes or no? Okay. Then next one is material price variance. So here we want to know that is it that my variances are coming due to change in price? If yes, we'll check with this formula. So what is the formula here? Standard price minus actual price into actual quantity. We want to find out the variation is coming due to price, and if it is coming to what extent. Okay, what is the amount of variation? Okay, we'll compare with the standard price with the actual price, and when we'll multiply it by actual quantity. So this will give you answer for material price variance. Similarly, beta, if I want to study that yes, my variances are coming due to price only, or there are other factors also responsible. So yes, the second factor is quantity used. So if I want to study that variation, what variation are coming due to change in usage. Okay, so for this, we'll use this formula. The formula says you have to compare standard quantity with the actual quantity. The formula is standard quantity minus actual quantity multiplied by the standard price which you have thought. Correct? So when you apply this formula, you will get whatever variances are coming due to change in usage. Okay. So now quickly, we'll take a very small formula, one small problem here. So the values here given, exactly clear values are given. Standard quantity is 4,800. Standard price is rupees 3. Actual quantity is given 2,400. Actual rate, generally rate is applied for labor. That is why I'm making change here. So actual price will write 3.2. Now, bacha, we'll write the formulas, we apply the formula, and we'll find out the answer. Okay. So what is the formula for material cost variance? Standard quantity into standard price minus actual quantity into actual price. Correct, everyone? Yes or no? So now tell me the values. What is standard quantity we have? Come on.
4,800.
Exactly. So 4,800 multiplied by standard price is 3, correct? Minus
Yes, sir.
actual quantity is what? 2,400 multiplied by what is actual price? Rupees
3.2. Rupees 3.2.
3.2. So now solve this and tell me the final answer. Yes. Tell me the final answer, bacha. 4,800 into 3.
14,400.
14,400 less 2,400 into 3.2.
7,680.
Very good. 7,680. You are telling me final answer, or this is just for 2,400 into 3.2?
Yes, sir. 2,400 to 3.2.
Okay. Tell me final
And
answer.
final answer is 6720.
6720.
20.
Very good. Very good. 6720. Okay. So is this coming in positive or it is in negative? It is positive or negative? See here, this is positive answer. So we denote it by F, favorable. Correct, beta? Is this clear, everyone?
Yes, sir.
Yes, sir.
Okay, that's great. Okay. Now, let us find out material price variance. What is the formula for that? Standard price. We are focusing on price. So standard price minus actual price into actual quantity. Now, tell me the final answer or replace the values first. What is standard price? We have 3 minus 3.2 multiply by, yes, actual quantity. What is the actual quantity we have? 2400. So tell me final answer. 0.20 multiplied by 2400.
480.
480.
Yes.
480, but this will come
Negative.
So
Negative
this is
minus.
denoted by adverse. Okay, beta? This will be denoted by adverse. Now, material usage variance. Everyone just cross check. You are getting the same answer or not? Yeah. So now let us take material. Let's find out material usage variance also. So what is the formula for this? Standard quantity minus actual quantity into standard price. So replace the values, bacha. Standard quantity we have 4800 minus actual quantity we have 2400. Multiply by, what is standard price we have? Rupees 3. So solve this and tell me final answer.
7,200.
7,200.
7,200.
7,200.
Yes, sir.
It is coming positive. So we'll write favorable. Correct, beta? Is this clear, everyone?
Yes, sir.
Yes, sir.
Okay. Now there is way to check whether our answer is right or wrong. Okay. How to check that? Let's do it in verification stage. So have you taken the screenshot of this? Because I need these answers. Done? Have you taken the screenshot?
Yes, sir.
Okay, fine. Let's move to next. That is called verification stage. So just we'll put up the values here. Yeah. What is the material cost variance we got? What was the material cost variance we got, bacha? Cost variance, only cost variance.
6,720.
6,720. Okay. Then price variance
480.
480.
Minus 480.
So that will denoted by A, which is adverse.
Okay.
And here it was favorable,
F.
correct?
Yes, sir.
And here usage variance
7,200.
7,200.
7,200 favorable, correct? Now,
Yes.
the formula for verification is, see, material cost variance we denoted by MCV. Okay. And material price variance we denoted by MPV. Okay. And usage is MUV. So verification rule says that material cost variance should match with material price variance plus material usage variance. If both the sides are tallying or if both the sides are coming same, that means whatever we did is to some extent is right. Okay. So yeah, just cross check. 6720 favorable, 480 adverse plus 7,200 favorable. Just cross check. This both the sides are matching. Is both the sides are same? Yes or no?
Yes, sir.
Yes. Okay. Okay. So if this is happening, you are getting this answer. That means this answer is correct. Whatever values you have taken. Okay. So here, bacha, this is one of the easiest topic where we know whether our answer is right or not. Even there are two more variances are there. Material mixed variances are there, and in labor also there are mixed variances. So we'll take up later. First, we'll understand the basics of this material cost variance. Then we'll understand the basics of labor cost variance. Then we'll go to the material mix variance and labor mix variance. Okay, fine. So quickly take the screenshot of the formula. These are okay. So today we have completed the first part for material cost variance. Okay. So thank you so much.